Hi, I'm Mike Gassewitz, CEO of IAIC, and welcome to another installment of In Focus. Joining me today is Krishna Beharry. Welcome, Krishna.
Thank you, Mike.
Yeah, Krishna is one of our portfolio managers and also covers and runs our utility sector. So great to have you chatting with us, Krishna. I guess before we dive into it, maybe you can just at a high level describe what exactly is the utility sector?
Yeah, the utility sector consists of um, telecom companies, pipeline companies, and electrical generators.
Excellent. So obviously, period of volatility in the markets, and just how is the utility sector doing?
Well, this past quarter, it actually got hit pretty hard. The utility sector is very sensitive to interest rates because people will flock there for income in their portfolios, and when interest rates start to rise, they don't need the income as much. Investors don't need the income as much from utilities. So you see a migration out of that sector and into other areas of the market where they can get a better income. So this past quarter, the utilities was actually the worst performer. And year to date, it's probably in the middle of the pack of sectors. So this quarter, it was down 7.1%. But over the year to date, we're only down about 5%.
Okay, and is that the sector overall, or our core picks are down with those numbers?
That's the sector overall. Our core picks are in that neighborhood as well,
Okay,
slightly better.
slightly better.
Yeah.
Any standouts from those core picks that you want to chat about? Anyone you want to highlight that is faring a little better than the others?
Yeah, I would say that the payout ratios of the telecom and pipeline companies are quite favorable right now for investors. And when I say payout ratio, that really means how much cash is the company pulling in versus how much does it have to pay out. And so when we have a low payout ratio, that kind of is an indicator of, well, there's maybe room for that company to increase their dividend.
So in terms of, as you said, with rising rates, utilities tend to get hit a little harder than other sectors. Have we been doing anything about that in our clients' portfolios?
Yeah, so we've kind of been focusing on company, like the big driver for here is going to be growth in the greener area of the sector, meaning utilities have to change their ways, so to speak, so they're not as, like, green technology is going to drive innovation in the sector, meaning as more people get plug-in hybrid or electric vehicles, the electricity grid has to be able to handle the demand on that. So electricity is going to be in high demand and that sort of thing. But we have to weigh that against the cost of this infrastructure to these companies. And with higher interest rates means that they would be paying higher interest on the greater amount of debt that they would take on. So those are things that we kind of weigh all the time to make sure that we're choosing the right horse in this race.
Right. And then as a sector, as we look at a client's entire portfolio, including the other sectors, have we been trimming our position, so to speak, in this sector compared to the others?
Yes, we absolutely have. Earlier this year, at the beginning of the year, we took a look at the clouds in the sky and said, okay, we're heading into a time of higher interest rates. All expectations are that interest rates are going to continue to rise. So we lowered our weighting in the utilities in our portfolios to the lowest weighting it's ever been, at around 15% of the
Okay.
equity.
Okay. Good to see. At least, again, our process at work in terms of that sector approach and making those calls when we see the macroeconomic conditions change.
Yeah.
So given the markets, given the sector, should clients be concerned at all?
No, growth is the only way we think that utilities can avoid a steep correction. We're forecasting about a 6% average earnings growth rate for the sector, and this should offset some of the valuation downside. Renewable energy, as I said, has state and federal tailwinds behind it, meaning that the leaders of the country, they're all for greener technology. Electric vehicle sales drive the bullish outlook on electricity demand. So safety, reliability, and resiliency are top of mind following the extreme weather events that we've seen this year. And so that's going to be a considerable factor when investing in utilities. And that's something that we look at.
Right. Basically, we're in it for the long term, and this too shall pass, the current economic conditions.
Exactly. That's right.
Okay. Krishna, thanks very much.
No problem.
Folks, as always, if you have any questions, reach out to myself or Krishna, and for sure, as always, don't hesitate to reach out to your portfolio manager. Thank you very much.